SUERF, the European Money and Finance Forum, bringing together policymakers, finance, and academia.
Welcome to this SUERF-Baffi Bocconi Meet the Author webinar on Robert Triffin's life and research, takeaways for the current and future international monetary order. The starting point for our discussion will be a presentation by Professor Ivo Maes, Robert Triffin Chair, University of Louvain, and Visiting Fellow of Bruegel. Ivo will draw on his and his co-authors' recently published and much acclaimed book, Robert Triffin Alive. The book is a thrilling read, interweaving Robert Triffin's biography with global economic developments and the evolution of thinking on the workings of the post-war international monetary system. Ivo will, in his presentation for us today, focus on the latter, on economic aspects. This will prepare the ground for a discussion among three outstanding international experts in the field. Professor Harold James, Princeton University and SUERF Fellow, will offer his unique insights as one of the world's leading economic historians. Welcome, Harold. Thanks for making it.
With you.
Then Robert McCauley, non-resident senior fellow, Global Development Policy Center, Boston University, and Faculty of History at University of Oxford, will bring in his decades-long experience as BIS Senior Economic Advisor, combined with a deep understanding of economic and monetary history. Bob, thanks for making it from the island of Pico. And last but not least, André Sapir, Professor Emeritus, Université Libre de Bruxelles, and Senior Fellow at Bruegel, will bring in his combined experience as an academic and as economist and advisor in leading positions in the European Commission and other important European Union bodies. A warm welcome, André.
Thank you. Pleasure to be here.
Without further ado, may I hand over to you, Ivo.
First of all, I would like to thank SUERF and Ernest for this very kind invitation. And I would also like to thank my co-author. Robert Triffin is mainly known for the Triffin dilemma, the Cassandra who predicted the end of Bretton Woods. Now, what we do in the book, but which will not be the theme of today's presentation, is also stress Triffin, the moral indignation Triffin had at the US balance of payments deficits, the richest country in the world, which was financed by the poorer countries, and this to do the war in Vietnam. This Triffin was really indignated, and that was a very strong moral position in him. Now, so what we did in the book is also the man behind the Triffin dilemma, but this will not be the topic of today's presentation. And so Triffin dilemma, the end of Bretton Woods system not sustainable. And so he is also a policymaker at different levels. And so he has a double track in his policy proposals. He has a plan A, and the plan A is reform the international monetary system. And there he is very much on the lines of Keynes, an international central bank. And as he sees plan A is not working, so he has a plan B. And his plan B is regional monetary integration, going towards a multipolar international monetary system. So Triffin's early years, well, he was a child of the interwar period. A child of the interwar period, and it's the Great Depression. The market economy is not self-adjusting. And so he goes to study economics. Yeah? And his approach towards economics is, we have to avoid catastrophe, we have to build a better future, more prosperous and more peaceful future. So he goes to study economics. And firstly, he studies economics at Louvain in Belgium, as he is a Belgian, and which were the important professors in Louvain and his work. Firstly, there is Albert Edouard Janssen and Paul van Zeeland, who were giving the courses on money and central banking. And Janssen and Van Zeeland, they were not only important academics, but they were at the Belgian Central Bank, member of the board, vice governor, finance minister, prime minister, so very important policy people. And what did they teach, Triffin? Well, the monetary system is evolving. It's gold, which is gradually being replaced by fiduciary money. And there you see what Triffin, this Janssen and Van Zeeland, they did it for national economies. And this is what Triffin will advocate on the international monetary system. We have to evolve from gold to fiduciary money. Other important person in Louvain was Duprier, business cycle analysis. And what is typical for Duprier, an empirical approach, emphasis on dynamics and the transition period, elements which Triffin will also take up. And then very important is the Belgian devaluation of 1935, Paul van Zeeland, Prime Minister, prepared by Duprier in Louvain. And then Triffin, he was the young economist who did the calculations. And what did Triffin notice in these calculations? Well, prices of raw materials, they're much more sensitive to the business cycle than industrial products and wages. And so you already see their center for periphery view of the world economy. Now, in 1935, Triffin goes to Harvard for his PhD, and there he comes in a completely different world. Schumpeter, Leontiev, Chamberlain, pure economic theory. And he will write his PhD dissertation on monopolistic competition and general equilibrium theory. His PhD, it would be a theoretical interlude, as it's the only period in his life that he would be in real economic theory. But what is important, that what we emphasize it will shape Triffin's perception of economic phenomena. Monopolistic competition, he will be attentive to power in economic relations. General equilibrium theory, he will look for counterparts. If one country has a deficit, another country must have a surplus. So it will shape his perception. Second World War, he has to stay in the United States. And like many other economists, he moves to Washington during the Second World War. And in Triffin's case, and Triffin, meanwhile, he has become an American, nationalized. And he moves to the Board of Governors for the Federal Reserve System. And he becomes responsible for Latin America. And he will do several missions to Latin America. And he will also start reflecting on, well, what is Latin America and what is Latin America's place in the international monetary system. And his first observation, his basic observation, well, the business cycle in Latin America, it's different from the business cycle in developed economies. In developed economies, it's savings investment, which is the driver of the business cycle. But in Latin America, it's the external sector, especially export, imports, capital movements. And so, policy conclusion of Triffin, as the business cycle is driven by these external factors, if you want to stabilize the business cycle in countries in Latin America, what you need is international reserves. International reserves, and he will move from that in his first important essay, National Central Banking and the International Economy. International liquidity will be at the heart of the global economy. And let me make advance in time. We are there intellectually at gold and the dollar crisis, 1960. What is key in gold and the dollar crisis? We need an adequate level of international reserves and liquidity in an expanding world economy. And this is the key of Triffin's analysis. And then he starts looking at what is the international liquidity? an international liquidity Bretton Woods system, it's gold, the dollar, and sterling. And then well, he is marked by also the Great Depression, the sterling the sterling devaluation, and the implosion of international liquidity in the 1930s. And so what he will emphasize is the vulnerability of a world monetary system whose operation becomes increasingly dependent on one or a few national currencies as major components of international monetary reserves. And then we are at the Triffin dilemma. The Triffin dilemma, an expanding world economy needs more liquidity, needs more dollars, and so the coverage of the dollar in gold will go down, and so the dollar will become vulnerable to speculative attacks. And there we are at the Triffin dilemma. So then, how to solve this problem? Plan A is a reform of the international monetary system, an international central bank. And so there is very much on the lines of Keynes. And here you also have Triffin's passport as a planetary system, as a planetary citizen. And so a world currency, and you get it with the Rio Agreement. But there Triffin has a mixed reaction to the creation of the special drawing rights. He says this is important, this is positive, as we have really a new international reserve asset which is not a national currency. But, he says, firstly, the fundamental problem of the system, the use of national currencies as international reserve assets, dollar and pound sterling, has not been corrected. And his second criticism, well, what is the allocation key for special drawing rights? It's the position in the fund, it's the quota, and so rich countries with big quotas, they get much more SDRs. And so Triffin says this is not just. We should link the creation of special drawing rights to development objectives, and then we are at the key of still what are still debates, actual debates in the international monetary system. So that's Triffin's plan A, which has not been very successful. And we get to the end of Bretton Woods. Now, what is Triffin has said, end of Bretton Woods, this will be the end of the dollar, like it was very also important for the pound in the 1930s. However, the end of Bretton Woods will be no end of dollar supremacy. And Triffin, 1978, he admitted, I was totally wrong in underestimating duration and the size of the US deficits that foreign central bankers would be willing to absorb at the cost of an inflationary explosion of world monetary reserves. So there, Triffin admitted that he had, he said, I foresaw the end of Bretton Woods, but it was not in the way I had foreseen it. Now let's go back in time. Triffin, during the war, he was at the Federal Reserve. Then 1946, IMF is created. And Triffin, he was one of the first economists at the International Monetary Fund. He became one of the heads of unit at the research department. And very quickly, he moved also from working on Latin America to a focus on Europe, which with the Marshall Plan became the key focus. And there, Triffin is a pragmatic person. What is the key policy problem? And the key policy problem, he says, it's dollar scarcity and bilateralism. And so he goes for a pragmatic approach. He says worldwide convertibility is not possible, but we can do something in Europe. We can have multilateral clearing, get rid of bilateralism, and we can have a European payments union. And Triffin would play an important role in the negotiations. And he would come with the proposition, the concrete proposition for the currency unit of the European Payments Union. And then Triffin, architect of the European Payments Union, and later he will make a lot of proposals for regional monetary integration. Regional monetary integration in Europe, in other parts of the world, and his model, well, it will be the European Payments Union. And so looking at Europe, a European Reserve Fund, pooling part of the international reserve of central banks. This European Reserve Fund has funds available. It can do different types of operations, open market operations, loans, so that it can be mutual assistance. It will be a path to a European Monetary Authority. Second element, a European currency unit, like you also had a currency unit for the European Payments Union. And so you get, and this is the plan B, a multipolar international monetary system with Europe as an essential pillar. It's still very much on the agenda today. Now, Triffin, he did not only make proposals for Europe, he also made proposals for Latin America, for Asia, for the Arab world, for Africa. And in the book, we did not so much elaborate on it. We did a recent paper, with Ilaria on the Asian Payments Union. And there you have the same type of idea, an Asian Reserve Fund, an Asian currency unit. And Triffin is very much of the idea, if you do trade liberalization, you must also do payments liberalization and make a payments union. He was very much in this dynamics of the integration process. But he is also an early advocate of the Global South. That's when he will present these proposals. He will say to at these meetings in Japan and other places, but look, you in Asia, why do you put your foreign exchange reserves, why do you invest in dollars and in pounds? Create European Reserve Fund, and you can eliminate the intermediation profits of New York and London banks. So there he is very much an early advocate of the Global South. To conclusion, Triffin, well, he's known for the transient analysis of Bretton Woods, the Triffin dilemma. What we have put in the book is also the moral indignation of Triffin at the US balance of payments deficits. He is a critic of the own house in order approach. He is in favor systemic general equilibrium approach. If one country has a deficit, another country must have a surplus, and you have to correct from both sides. He wants a true international monetary system. His plan A, very much like Keynes. Plan A does not go. Plan B, proposals for regional integration, shaped by the experience of the European Payments Union, Reserve Fund, currency unit, a multipolar international monetary system. Thank you.
Thank you very much, Ivo, for this overview of some findings touched upon in your book, and for this excellent overview of key economic and political issues at the core of the post-World War II international monetary system. It is now my pleasure to pass the word to Professor Harold James. Harold, over to you.
Well, thank you, Ernest, and it's a great pleasure to be here with you and to talk about Ivo's wonderful book. I think it feels acutely relevant, the debate that Ivo is talking about and has summoned up from the past. And in some ways, I do have this feeling that we're back in the world of the 1950s and 1960s, and you know, people are talking about a new Cold War. The Oppenheimer film got an immense amount of support and interest, and it looks at a balance of terror and mutually assured destruction. I think we can also think back, there are some wonderful films from the 1960s from that period that look very relevant. So I was just looking a few weeks ago at John Frankenheimer's film 7 Days in May, which really looks looks also very acute. But you know, as Ivo said, the Triffin dilemma was a brilliant analysis, but in essence, a brilliant analysis of what had gone wrong in the 1920s and had come to a spectacular failure in September 1931. And so the Triffin dilemma is exactly right for the story of the British pound in the 1920s and up to September 1931, up to the British devaluation. And there was really a problem that, you know, either you wouldn't create enough reserves and the world would have a deflationary problem, or you would create reserves. And in that case, you would build up liabilities against the British pound and against the Bank of England. And those liabilities would face the possibility of a run in the event of something bad happening. And that run indeed took place in the summer of 1931 and led to the British devaluation. So, you know, it's a really good analysis, but an analysis of the past. And, you know, when I think of the 1960s, I think you might put in, if you wanted to have figures who interpreted the 1960s, two other figures seem to me to be plausible candidates to hold out lessons from the 1960s that are still in some ways relevant today. One is the great Canadian economist, Robert Mundell, who gave a spectacular lecture in Geneva in the late 60s, so just in the moment when the Bretton Woods system was approaching its final crisis. And in that lecture, Mundell made three prophecies: one, that the Soviet Union would collapse, two, that Europe would move into a monetary union, and three, that the US dollar would remain the key currency, the central currency of the world for his lifetime. So that the US dollar would remain. And you know, I thought economists don't very often make predictions. And when they do, they're mostly not accurate predictions, but these are all spectacularly accurate. And it's very interesting, I think, and it speaks to the strength of Mundell's model. The other economist who I would think of who really gave a profound interpretation of the 1960s, and is also the subject of an excellent biography, like Ivo's biography of Triffin. It's a really compelling read, is Perry Merling's biography of the great American economist, Charles Kindleberger. And Kindleberger, in the middle of the 1960s, slightly after the formulation of the Triffin dilemma, put forward with Walter Salant and Émile Desprez a really compelling interpretation in which the United States was acting as a kind of bank for the rest of the world, and the world put short-term deposits in the United States, and the United States made long-term investments all over the world, and that the United States is a source of long-term investments. And so the US is a kind of bank, and people have updated that analogy and said, well, that's you know, maybe the right analogy for the 60s and 70s and 80s, and in the 90s and 2000s. It's more that the United States is a kind of global hedge fund, but it has the same kind of transformative impact. You know, both the Kindleberger and the Bob Mundell formulations, I think, are really the correct explanations of why the United States has remained the key currency of the world. And despite all the anxiety and despite the worry, and you know, when Ivo presented back on the European model as a model for integration over the rest of the world, the European model obviously has been, and I think it is a success, but it depends on a pretty unique political configuration, a constellation. And that constellation is simply not present in other areas of the world. So in the Gulf, for instance, in the early 2000s, when the euro was being introduced, there was quite a lot of interest in getting a Gulf currency, and there was a plan to have it by 2010, but it it got postponed and postponed, and then after the global financial crisis disappeared altogether. South America has had a similar kind of projects continually, but mostly they are connected with absurd politics. The most recent plan, for instance, was Bolsonaro had a plan for a Brazilian-Argentinian currency union in order to provide a bastion against socialism, as he termed it, but nobody took that seriously. And the Asian story is simply very difficult. I mean, if you think of the relationship between the People's Republic of China and Japan and Korea, it's not necessarily very warm, to put it euphemistically. So the political constellation is not really there. And the question of what is going to succeed the dollar if the dollar would ever crumble, and there's increased discussion of that now because of the way that there's a perception that the United States is using its exorbitant privilege in a new way. It's weaponizing the dollar, it's using the dollar as an instrument in sanctions, it's doing the central bank freezing of assets on Russia. Other countries are frightened that that kind of policy might be applied to them. And that generated a lot of dynamic, a lot of push for a BRICS currency. But you can see, I think, already quite a lot of skepticism. The only country that is really pushing systematically for the BRICS currency is Brazil, and it's frequently advocated by President Lula. And the president of the BRICS Bank, the New Development Bank, Dilma Rousseff, was obviously also a former Brazilian president. But that, I think, has all kinds of limitations, and as long as you don't have the full convertibility of the renminbi, you don't really have the likelihood of the Chinese currency being a global currency to replace the dollar. And so you might say, well, why not just make the Mundell prediction and update it a bit and say, it's going to be around for all of our lifetimes. I mean, I think there are reasons to be a bit more skeptical than that, and to think that there may be alternative currencies. But if there are alternative currencies, I don't think they will come in the form of either regional currency unions or other national currencies to replace the dollar, but they would be in the form of private currencies that would be created in countries where there isn't much confidence in the state capacity to provide a stable currency, where there's consequently a demand for an alternative to the dollar, and where you can think of new technologies, distributed ledger technologies, as providing the basis for digital monetary units, currency areas, optimal currency areas that span multiple areas of the world and link together people, businesses, corporations in very different settings, in a truly global way, but without much regard to national frontiers. And that, I think, is a plausible alternative, but it's one obviously that still lies in the future. But the regional variant, I think, is definitively a misinterpretation of how the world can move, as Triffin's analysis of the dollar problem in the 1960s, I think, was also, and Ivo in effect said that, was a misguided interpretation of the world. And thank you.
Thank you very much, Harold. Very interesting points, and you already go to the core of the discussion, what we can learn from Robert Triffin's analysis for the future, what we cannot learn, and how the international monetary system might move forward. We now pass on to Robert for your comments and for your views. Bob, over to you.
Thank you, Ernest, for this opportunity to talk about Robert Triffin. I want to start with two anecdotes, both from Yaleys. According to Robert Aliber, Walter Salant told him after a Bellagio meeting where they would get together very fine circumstances in Italy and discussed the future of the international monetary system, that Walter Salant told him that after a Bellagio meeting that Robert Triffin would have supported any plan for the reform of the international monetary system as long as it would be called the Triffin Plan. Barry Eichengreen has a different take on the great economist. He learned that Triffin would be part of his oral examination, one of 4 professors, owing to the absence of Carlos Diaz Alejandro, a student of Kindleberger. Barry asked colleagues, well, what should I study to prepare for Professor Triffin's questions? And the answer was, what do you think? And so Barry boned up on his Triffin, and sure enough, Triffin spent his 30 minutes grilling Barry on the Triffin dilemma. Well, usually after the oral examination, there's a 3-minute period after which the student learns how he did. It was 30 minutes in Barry's case. In the end, he got pass with honors, but what he learned later was that Robert Triffin had held out for no honors. Let me pass on to more economic treatment of the man's work. So I'm going to talk about Triffin Dilemma 2.0 and 3.0, the current versions of the Triffin Dilemma that concern current accounts and safe assets, respectively. I'm going to try to give it in the sort of Tinker Toy model version. So just to refresh your thoughts on this, Triffin 1.0, there's an aggregate and there's a supply of the aggregate and a demand for the aggregate. And on the demand side, basically what Robert Triffin had was an international version of Phillips' 1920 notion of bank credit. We have the sort of money multiplier thanks to Phillips. The international version of it was growing rest of the world nominal GDP would result in demand for gold or US dollar liabilities to foreign officials. And on the supply side, basically it's what Barrow described in his 1979 paper. And a low price of gold was producing a low supply of gold every year, and high demand on the part of people for jewelry and other non-monetary gold uses. So then the US supply of dollar liabilities to the rest of the world would be governed by US policy. And the clear fear in Triffin's initial take was that US policy would prove tight, there would be not enough reserve growth and global deflation. Of course, the other horn of the dilemma was that if US policy were loose enough to satisfy the demand, US liabilities would soon come to exceed US gold, and there'd be a run on the dollar gold, and the system would collapse. So that's Triffin 1.0, gold and the dollar crisis. Now 2.0, basically it's the same story on the demand side. The growing rest of the world nominal GDP, which now it's important that it's sort of faster than the US nominal GDP growth, results in a demand for US liabilities to foreign officials. So same sort of story. And on the supply side, it's quite different. And there the model, as I think it really works, is there's a capital inflow from the official sector into the United States, into US securities, and that pushes the US into a current account deficit. And then the US net international investment position is simply those current account deficits accumulated over time. It's closing in on 100% of GDP these days. And the fear is that the US net international investment position to GDP ratio reaches some threshold, and then we have a US dollar crisis or US default. So I call that one Triffin 2.0. Many people believe that this is what Triffin argued originally. It's remarkable how people who should know better actually believed this is what Triffin argued. But of course, Triffin was arguing about a situation where the US was running a current account surplus, and these were all kind of capital flows in and out of the United States that were producing this possibility to run on gold in Triffin 1.0. But so the 2.0 has been, I'd say, for at least a generation, the way that most people think about Triffin in international finance. But starting now about 10, 12 years ago, there's Triffin 3.0, and some of the real cutting edge work in international finance has been about the safe asset problem. And again, the demand side is very, very similar. It's the story that growing rest of the world nominal GDP, again, faster than that of the United States, produces a demand now not just for generic US liabilities or dollar liabilities, but for US Treasury liabilities to be held by foreign officials. So the sort of law of motion here is that it's the US public sector borrowing requirement, by assumption, that produces the outstanding Treasury securities, makes them grow over time. And so the fear is that with the rest of the world sort of giving the US the rope, the Treasury debt supply responds to demand, and the Treasury debt to GDP reaches some threshold, and we have a US Treasury default or something else very, very ugly. And so that's the currently popular Triffin 3.0, the safe assets dilemma. Now, what are the objections to all of these schemas? Well, in principle, the demand side is not well founded. And we've certainly realized that with the money multiplier in the domestic context, but it doesn't really work in the international context either. On the supply side, there is in all of them really a confusion between the dollar and the United States. So even when Triffin was writing, there were dollars accumulating in banks outside of the United States that were held by foreign officials. And his story, his measurement didn't take that into account at all. So the situation was really worse than he described, because the US liabilities were relevant US dollar liabilities to foreign officials were larger than Triffin imagined. These days, foreign officials hold at least $1 trillion of claims on non-US residents in their reserve holdings. So there's a confusion between the dollar and the United States. There's also in the safe assets story a confusion between Treasury debt and US public sector deficits properly defined. And in particular, quasi-Treasury debt can be created by the US Treasury putting its imprimatur on private debts. We call these mortgage-backed securities, Fannie and Freddie, Federal Home Loan Bank, you name it. The only way, it's just simply not the case that the only way to produce Treasury, in effect, Treasury liabilities is for the US to run public sector borrowing requirements. On the fear side, Triffin knew better than the fear that he was communicating to the US Congress in his testimony. He knew that the Bank of England had run with the thin film of gold, I think it was Sayers, maybe it was Hawtrey called it. Help me out on that, Harold. But the fact of the matter was the Bank of England never had much gold and somehow managed to keep the sterling gold link. So Triffin well knew from history that the game was not up as soon as those two lines that Ivo showed us crossed. And with respect to 2.0 and 3.0, what is the threshold exactly when the US external liabilities or the US Treasury debt gets to be so high in relation to GDP that the game is up? And exactly how does the game up look in those cases? Now, and most of all, and I'm coming to my conclusion, Ernest, most of all, what has happened since 2014 is that global dollar reserves and US dollar reserves in particular have hardly grown at all. So of course we've had an explosion of Treasury debt since then, all of which is to prove that the US Treasury doesn't need the encouragement of the rest of the world's central banks buying US Treasury debt to issue it in rather incontinent fashion. So the factual basis for the most currently popular version of Triffin, the safe assets story, is completely undermined by a glance at the IMF statistics on dollar reserves outstanding and how they've evolved since China stopped accumulating 10 years ago. So that's my tinker toy model version of Triffin and his immediate descendants, currently very, very popular, both actually still very, very popular in international finance.
Thank you very much, Bob, for bringing some structure into our thinking about Robert Triffin and his thinking and the Triffin dilemma. Let me now conclude our first round of comments by handing over to André Sapir. André, over to you.
Thank you very much, Ernest. It's a real pleasure to participate in this webinar for two reasons. First, let me say that I really greatly enjoyed reading the book by Ivo and his co-author, where I really learned a lot. I'm a Belgian economist, and I learned a lot about Belgian and Belgian economists that I did not know before. And second, also because I did have the pleasure to interact a bit, not a lot, but a bit with Robert Triffin in the 1980s. I spent 10 years in America from 1973 to 1983, returned to Belgium in 83. And after my return, Triffin was then living in Belgium. And on several occasions, I had the occasions to be with him in seminars or private discussions. So the topic of the day, the international monetary system, I mean, it's a topic that has been with us for a long time. What Triffin indeed called at some stages, as Ivo said, the international monetary scandal. Now, we have had for the last 80 years a dollar-based international monetary system, first under Bretton Woods, and then the non-system, as some people call it, since the collapse of Bretton Woods. But the dollar has remained the dominant currency, the de facto world currency. And although many people have, Triffin and others, deplored this situation, partly on moral grounds, not just on economic grounds, but as Ivo really emphasizes, the moral side played a very, very important role in Triffin's views. So even though the dollar dominance has been deplored by many, or has been found, has been assessed to be unsustainable, also recently because of various policies or political situation in the United States, the fact of the matter is that the dollar has continued even after the 2008-2009 financial crisis that started in the United States, and that could have been perhaps viewed as the beginning of the unraveling of the dominance of the dollar in the international monetary system. That has not happened so far. So this is not to say that it cannot happen. Obviously, nothing lasts forever, but it does mean that the alternative to the dollar are certainly not a given. Now, what kind of alternative scenarios can one imagine to the current situation? Now, I think we can set aside the Triffin view, let's say the Keynes proposal of a bancor, essentially adopted by Triffin as well. I think that situation is not one that I think we can imagine in a foreseeable future, although it would have certainly some advantages. I think it would have also some major disadvantages that are not unrelated to the discussion that Harold put forward about regional currencies. So all the difficulties that would apply and that do apply to potential regional currencies would apply, I think, to a world currency not issued by a single sovereign like the dollar. Now then we enter into the more traditional discussion of an alternative that was much discussed at various points in time, and again I think very much around the time of the global financial crisis in 2008, 2009, when indeed the role of the dollar was perhaps viewed as in jeopardy. This is a more multipolar world. Now, what kind of multipolar situation? I think people sometimes refer to as, you know, two possibilities, sort of a bipolar or a tripolar. And whether one is talking of a bipolar or tripolar, the currencies that are put forward as the other poles, so not a disappearance of the dollar, but a lessening of its domination, and other currencies playing an important or equally important role. Obviously, those two currencies are typically the euro and the Chinese yuan. So let me look a little bit at those two currencies, and then also at what it would imply if two of those currencies, let's say the dollar and one of the other two, were the two poles, or instead if three of them were playing a significant, not necessarily equal, but significant, a very significant role. Now, I think we all know what are currently the weaknesses of both the euro and the Chinese yuan, not the same ones, but both currencies do have some deficiencies in being able to rise further than the role that they account for at the moment as global currencies. And I think Harold also mentioned some of those, maybe not all of them. I mean, for the Chinese yuan, certainly there is the issue of convertibility and financial integration. And my sense, but you know, one cannot project into 20 years, but if we look at the moment, I think that what happened in the US with the financial crisis was, in a sense, a setback rather than a push forward for the yuan. I think it was a warning. I think it was read by the Chinese leadership as a warning to convertibility and to too much financial integration at the global level. My reading is that the change of policy by Xi Jinping in a number of areas are related to the global financial crisis and to what happened in the United States, and that the Chinese leadership has assessed that politically they cannot afford to be in the situation that the United States found itself at the time of the financial crisis, i.e. China, and that's easy to say when we are perhaps on the eve of financial problems, which have been announced obviously many times in China, usually related to the construction sector. That kind of discussion was there, as you remember, before 2008 as well, where there'd also been housing or construction bubble, and the Chinese authorities are very much aware of that. But I think the kind of financial crisis that there was in the US that eventually was managed not that badly, although you can say that Trump coming after the financial crisis was, not completely unrelated, but nonetheless, let's say from it could have been much worse. I don't think that China wants to go, at the moment at least, in that direction. So I think that the financial crisis of 2008-2009 was a setback to the potential role of the yuan at the global level, because it would require certain changes, certain economic changes and certain political changes that the leadership is not willing to do at the moment. Now, it doesn't mean that this cannot happen in 10, 20 years' time, and certainly all the political issues and the weaponization of the dollar that we are seeing goes into the opposite direction. So I think there is a tension in China between those two views, the weaponization and wanting, let's say, a BRIC kind of arrangement, and China playing a role, and on the other side, what risks it would entail for the leadership. So in the euro, yes, sure, one can put forward some data that shows that the euro is an important currency, but we know that much of those numbers are related to Europe. The euro is more of a regional currency and regional at large, Europe and the surroundings, than a global currency. Now, what would it take for the euro to be able to assume a bigger role at the global level? Well, we know again what are the issues. One is financial integration, the famous capital market union. Financial markets are far from integrated inside the euro area. And the second issue is the supply of sovereign debt, the fiscal union question. And that's a bit, Harold, the question, your regional currency, what kind of currency is the euro? Is it a sovereign currency? Is it a regional currency? It's something a bit in between. And but maybe it is a sovereign in the making. It's a regional, but maybe will become a sovereign at some stage. Yes, we will have capital market union at some stage, and yes, we will have more of a fiscal union at some stage, and then the euro would be equipped to be able to play a bigger role. Now, let me just then put forward a few remarks and end on that. Let me look at sort of scenarios. Now I'm, 10, 20 years down the road, and let us say that the euro has managed to solve some of those impediments that I just put forward, and as then the features that equip it to be able to play a bigger global role, and that we have the dollar and the euro that are out there. And then, in a sense, you can say the market and the politics will decide, you know, will they be side by side? Will one dominate? Will the dollar have problems, you know, under Trump? All kinds of issues over debt. I mean, all kinds of elements that could mark down a diminished role of the dollar and increase of the euro. I think if that was the case, if the dollar and the euro were both very important currency, I think that would push China to equip itself and solve its own problem that it's not willing to do at the moment. And the yuan there would be political reasons more than even today for China to have a currency that is able to rival. So then we would be in not a bipolar, but in a tripolar world. What if, on the other hand, the dollar and the yuan were two major currencies, and the euro had not been able to equip itself with that? I think we would be then in a pretty complicated situation with sort of this rivalry between the US and China. Sort of, it would be bipolarism of the worst kind. And then I think, yes, it would. I think it would push the Europeans even more than before, and even more than now, to try to have a currency so that we would have not a bipolar, but a tripolar world. I think it would still leave the question, and obviously you are the economic historians, you, Ivo, and you, Harold, who remember better than me the literature on the days when we had the dollar and the British pound. You know, my reading is that the 1930s and the bipolar world was not a super happy world. So what kind of happy world we would have, or sad world we would have, if we had a bipolar dollar euro, more benign probably, bipolar dollar yuan, not very happy configuration. And if it's not that, sort of this tripolar world of the dollar, the euro, and the yuan. I really don't know. I mean, that's opening the Pandora box. Obviously, in Europe, that's typically the scenario that is desired by the leadership. That, you know, it would be great to have this tripolar world, but we have never tried it. So we have tried a bipolar, not very happy. And I said some scenarios of bipolar, especially dollar yuan, would be pretty frightening, at least to me. So would a tripolar dollar yuan euro be a more happy world, and how would it manage? I leave that as a question. Thank you.
Thank you very much, André, for elaborating on the various limitations of the euro and the yuan in expanding their roles as global currencies. And also thank you for sketching out some future scenarios for the international monetary system. So we have your scenarios for a bipolar, tripolar world. We have the interesting, possibility raised by Harold that it might actually be a private solution that might prevail in the end. I mean, if you look into longer horizons, I think many things are possible. So what I would like to do now is give each of you the possibility to comment on each other's points in the same order as we started out. So Ivo, do you want to start?
Okay, many thanks for all the comments and the discussions. So they're really interesting. Let's say maybe partly it's a comment on Bob's demand view. Triffin was a very special person. In the sense, he was a Keynesian Weltanschauung, The market economy is not stable, but in his methodology, he was a monetarist. And so this was his, he was at the Federal Reserve, where they did analysis of the money supply and the counterparts of the money supply. And so he applied this to Latin America. And there he also get this very monetarist view on trade is going, and so you need more liquidity. And which goes also to Harald's remark, well, Kindleberger had a more sophisticated model. And there it's a little bit, Tobin was one of Triffin's best friends. But, and Tobin is the portfolio approach, which basically Kindleberger is applying to the international economy, and there Triffin applies a monetarist money view a la Friedman, and he is there in a very crude, far too crude demand for international liquidity position. On André's scenarios, let's say going back as to the 30s, or firstly the First World War. And the First World War was a very big break, as it really, it was the United Kingdom had to pay for the war, and there changed the financial balance. And so dollar scarcity, it really started after the First World War, not the Second World War. And you are in a bit in a situation that you get, on the one hand, United States, the Fed was created in 1913. And so from there was a clear view, why was the Fed created? Because of problems in the United States, of financial instability, bank runs. So there was a domestic reason, but there was also an international reason to have, let's say that they don't have to going through the London market. New York should be able to compete with London as a financial center. So there you have these two things happening at the same time, but then you get United States in a very isolationist position. That they don't want to take up responsibility for the international economy. And you are with two currencies, which in the interwar period are more or less as important if you look at reserve composition of international reserves. But no player who wants to take responsibility for the world economy. And there you get very much to a different situation after the Second World War, where the United States will take up this leading role. And so I would add in your scenarios, well, what type of position will the United States take? Will they take global responsibility, or is it going back to isolationism? I would add, if I might complicate your question.
Thank you very much, Ivo. Now, before we continue, let me weave in two questions from the chat. The first question is from Thomas Meyer, and he asks Harold, but also I think the others, would not key characteristics for an international reserve currency be that the issuer is the major economic power, the major military power, and under the rule of law? If so, can the euro or the yuan ever challenge the US dollar? And then the second question by Gabriel Fagan. For that, I give Gabriel the microphone.
Thank you very much, Ernest. Let me begin by just thanking Ivo and all the panelists for their very interesting, insightful presentations. So I thought it very useful. What strikes me as an open question is when we now consider what happened over the last few years with sanctions, rising geopolitical tensions, and so forth, maybe is there any chance that this may lead to a revival of gold as an attractive way of storing international reserves, which will always be acceptable regardless of the geopolitical situation? So that's the first type of consideration. Well, how do the panel members see that possibility? The other possibility is whether you could see a move towards a more, what's called a Schachtian system of international transaction based on bilateralism or even some type of limited, broken up multilateralism, but of various groups. I'm just wondering what the panelists would think about that issue as well. Thank you very much.
Thank you very much, Gabriel. Now, I think with these two important inputs, I think we continue with our circle. Harold, what's your take on the other speakers' points and on the two comments from the chat and from Gabriel Fagan?
This is getting like a snowball. I mean, there are more and more interesting questions that evolve, and indeed the linkages between security and the rule of law and the economic system, I think, are really central. So I'm very, very glad that Thomas Meyer brought that question and put it in the center of it. I had a reaction to André's scenarios. I mean, there was a world apart from the joint British-American world of the interwar period, which is the world that, you know, basically Kindleberger looked at and thought was terribly unstable, and, you know, famously said that, you know, the problem was that Britain couldn't afford to be the leader anymore, and that the United States didn't want to be the leader anymore. And you know, we can obviously envisage possibilities like that in the future. I mean, if you think of a 2024 that would produce a new Trump government or a Trump-like government, you might indeed get into that world, but we're not there yet. And we're actually, I think, in a very interesting world in which there's less of the formation of blocks than I think many people think. And Gabriel's question, I think, is, you know, invites that kind of discussion. Is the world really shifting into this block world? Well, one of the really impressive papers that was delivered in Jackson Hole a few weeks ago was the paper by Laura Alfaro and Davin Shaw. And the discussion there is that, you know, yes, the relative share of China in US trade has been falling, but US has been dealing more with Mexico, more with Vietnam. And if you look at what Vietnam and Mexico do, is that they buy more from China. And so we're just actually adding in a complicated element. And I think there will be bits and pieces that always link those worlds. And so the possibility of the world breaking up is I think, much less real than many people think. There is, I mean, another kind of version of a dual currency world is, you know, maybe it's a variant of one of André's options about the US and China, is what the situation was like between 1945 or 1947 and 1990. I mean, there was also a world that was divided into blocks then, and, you know, a lot of the world traded with the US dollar, but then there was a world that did most of its trade between East European countries and the Soviet Union was invoiced in rubles, but they also operated in dollars, and they saw more and more in the 1980s that they needed dollars, and that was, you know, that was actually one of the beginnings of the end. And in that sense, you know, I think, you know, that's why the remark that Mondale made in 1969, which I love so much, about the breakup of the Soviet Union and the continued preeminence of the dollar, is actually a linked one, that it was the dramatic need for dollars in order to modernize in Central Europe, and then by the late 1980s in the Soviet Union that they wanted the dollars as well, and so in effect they can't continue with the system that they had, and I think that really shows how the world is more and more linked by the dollar system, and how basically that's the world that would remain as an little alternative, except as I tried to outline briefly at the end of my comments, as when instead you get private currencies. Can you think of gold like that? That was one of the questions that Gabriel raised, and I think it is true that some countries have, when they get worried about the state of the world, they ostentatiously build up gold reserves. So spectacularly, a few years ago, the German Bundesbank transferred its gold reserves from Paris and London back to Frankfurt. But this strikes me as being something that's a reaction to public opinion, to public discussion. It's really a hedge against a world that is very unlikely to exist. And if you think about it, it's not even that good a hedge, because having a big gold reserve isn't, in particular at the moment, an advantage for Russia. It's not easy to trade in gold, and the gold can be sanctioned in just the same way as the foreign currency reserves can be sanctioned. And in that sense, it's not really a very good alternative. Yes, I mean, I think the dollar is likely to remain, with the addition maybe of private currencies. And I think if you want to think of a way of conceptualizing that, money is about translating, and in the same way as we've moved in a globalized world to have the language that for some of us it's our native language, but for many of you it's not your native language, but you have to speak in English in many events. Will you be able to move away from that quite quickly? I think yes, because the potential for automatic translation and synchronous automatic translation is growing very quickly with AI applications, and that's exactly, I think, the analogy. Everybody. You could talk in French, or you could even talk in Flams on a meeting like this, and we would be able to understand you immediately. So you wouldn't need to go through this laborious exercise. And that, I think, is the analogy with what the private currency world might be able to do with a world in which translation, effectively monetary translation, becomes much easier.
So that's another very interesting point, Harold, that you made. So what will be the AI translator in the international financial world then? This is basically what you raise with your last point. Interesting point.
Well,
really.
exactly. I mean, the point is, in a way, it seems to me to go back to the origins of international trade, with the Bill of Exchange and the uncertainty about whether bills would be paid. But when you have a payment system that is on a distributed ledger, you can link it to the knowledge of a payment, and so you remove an element of insecurity where for a long time, for centuries, we needed the state to step in as a guarantee of that security. But now, if you think about it, you can have the knowledge that a particular good is being transacted and that a payment is being made for it, and you don't need the external guarantee. That would be, I think, the basis of that kind of vision.
Very interesting point. Thank you very much. We now move to Bob. Inspired by all these comments and questions, what's your take on them?
On that last point, see chapter 14 of the 8th edition of Manias, Panics, and Crashes for a chapter entitled Bitcoin Worse Than a Ponzi. But 2 points for André, one for Ivo and one for Gabriel. I'll go quickly. I think the world setup right now is an unequal duopoly, André, and I think it's unfair to the euro to say that it is merely a regional currency. If you look at the way the market trades the Australian dollar, and there's some of this in all what we call the commodity currencies, the euro's exchange rate is very noticeable. The Australian dollar tends to be more stable against the euro than against the dollar. So if you draw a eurozone that includes currencies that vary less against the euro than the dollar, that includes Australia and New Zealand, South Africa, and on a good day, even Brazil. So it's an unequal duopoly, I think, is where we are right now with the Japanese yen as sort of a currency zone of its own. The other point I'd like to return to of Andre's is the interpretation of the Chinese response to the great financial crisis. I think quite to the contrary, that engineers in Beijing looked at the dollar in 2008 and they said, gee, this is a single point of failure for the whole world. A well-engineered system does not have a single point of failure. Now, as it happened, the Fed, by pumping out $600 billion to central banks around the world, fixed the problem pretty quickly. But the Chinese took the point, and I think they got much more serious about the internationalization of the RMB, precisely to have a fallback, just as any major bank is required by its supervisors to have fallback mainframes. The world system has something of a little fallback in the RMB these days. Ivo, you provoked me by saying that Kindleberger sort of applied Tobin to international finance, and I have to take exception to that, because it seems to me Charlie was not like Tobin or his colleague Modigliani, in that his unit of analysis was essentially the world rather than the nation state. And his approach to international finance was not what can we do to maximize the scope for national discretion, which was, you could say, a common question between Milton Friedman and his enemies among the Keynesians, just a very, very different approach. And finally, Gabriel Fagan asked, could we be going to a Shaktian world? And I was reading about the problem of the Russian balances piling up in India. And I think they may need to bring back Shak to help them work out that bilateral arrangement. But that's an extreme case. I agree with Harold. The world is not generally going in that direction, though it's not impossible to imagine that.
Thank you very much, Bob. All very interesting points. I mean, your first point, really, if I may paraphrase it, it's formal currency zones or institutionalized currency zones versus empirical currency zones.
That's good.
That's a very valid point. And the second point you made reminds me a bit of the resilience literature and the point that redundancy is important to guarantee stable systems, also a stable international monetary system. Very, very, very relevant points. Thank you so much. I hand over to André for your round of comments, André.
Thank you. Thank you very much. I want to take up one point only, the issue of the private currency that Harold has raised. That on the surface, and maybe beyond the surface, runs exactly counter to Thomas Meyer point about, let's say, hegemony, military and political power, and also in part what Ivo discussed, where the future of the dollar depends on the political stand that the US adopts vis-à-vis the world, isolationist or internationalists. So can one have a global currency not issued by a state and not issued by the dominant state? Okay, it's a dominant state by definition, it's a state, right? I mean, that's the thesis of Thomas Meyer, and I would say the Charlie Kindleberger's hegemon. So you need a hegemon, you need a dominant state, but that means a state. And Harold goes one step further, say, well, not only you don't need the hegemon, you don't even need the state to issue the global currency. That there are private currencies, that is not the issue, is whether private currency can assume a dominant role. Now, I have difficulty with that view, and I mean, I will, and I'm putting my difficulty in order to hear back and to push back against my my skepticism. So my sense is that modern currencies, and I will indicate in 1 second what I mean by a modern currency. Obviously, a private currency is also a form of modern currency, but not the one I have in mind. A modern currency need to have a state. And that is also the euro's problem, right? So when I looked at the weakness of the euro, and that goes back obviously to Tommaso Padoa-Schioppa, the way he was looking at this discussion, a currency without a state, and there have been different views about what that means exactly. But all of the points that I made about the euros not being equipped yet fully with all of the features for it to play the role that it wishes to play is related to that question of a currency without a state. Now, what would happen if indeed, because of failures of the sovereigns that are issuing currencies, and obviously the dollar first, but let's say the Chinese and the euro not being able to play a bigger role, indeed, private currencies, because of that space, right, because of the inability of the state actors to issue quality currencies, well, people turn away from those currencies, and indeed private currencies that are there that may expand do become much more dominant. So in a sense, de facto, out of the inability, for instance, the isolationist view that, scenario that Ivo put forward, which is obviously a possibility for the US. Now, what I would fear, and that's what I would like to hear back from you, what I would fear in that situation, and I would think would be therefore a very unstable situation and temporary, I would hope, is that there would be no monetary policy would not be accompanied by fiscal policy. And that's what I mean by modern currency. It seems to me, and my reading again of history, and again, I feel a little shy to say this in front of such prominent economic historians. My reading of history is that one of the reasons, if not the main reasons, why gold was abundant was precisely because gold was not accompanied by fiscal policy. In situation of difficulty, you really had monetary policy playing to the full and all the consequences that had, and it was politically not acceptable to get into such depressions that the gold attachment to gold would impose. And there have been so many, obviously, so many discussions in history to that. So it seems to me that in our political environment, in our democracies in particular, it would be completely unacceptable to leave the state without the levers of monetary and fiscal policy. And yes, I know you're all going to tell me monetary policy and independence of central banks, but we know what happens in a crisis. In no crisis is monetary policy any more independent, and thankfully so. Thankfully so. Yes, obviously they are decided by people who are supposedly independent, but they decide their monetary policy very much in conjunction with political leaders in one way or the other, whether they simply read the newspapers or whether they talk to them, doesn't matter. And monetary policy and fiscal policy become not unified, but work together at certain times of crisis. And I said, thankfully so. Now, what would happen if we had private currencies? How would that work?
Thank you, André. I want to throw in another idea into this discussion, namely the narrative that central banks have over the past 3-4 years so much, rushed into CBDC development to push back against global private currencies. I mean, the Libre, the DM, which has meanwhile vanished from the scene again, but also maybe because of, pushing back by governments. But still, the story is not over yet. So just with throwing this in, I want to make a final round. Maybe Harold, you want to start because you were addressed directly.
Yes, thanks. And Ernest, that's obviously right, that it's exactly the challenge that Libre posed that then got the response by the central bank community all over the world. But André's points are very, very convincing. But in a sense, they're answered by the kind of question that Thomas Meyer posed earlier, because for some countries, this interplay of fiscal and monetary can be done in a responsible way, and when it's done in a responsible way with credible commitments about future stability, it's good. But there are many countries in the world where that's just not true. So I think most spectacularly in Argentina, you're going to see that as a big issue in the election in Argentina, but where you have very, very high levels of inflation, where it's impossible to get out of the inflation, then the monetary authority is incredible, but the fiscal authority, which is often really pushing this, I mean, these are always cases of fiscal dominance where this is happening, those societies then don't have any alternative. And what do? Well, they can dollarize. Yes, I mean, that's the way historically over the last 20 or 30 years, people have gone with unstable currencies, that they've said, we're going to, most of the world does it in dollars, but if you're in Central Eastern Europe or North Africa, you do it in euros. That's all right, but I think that's exactly the area where a private currency will come in, where governments have failed. And the fact of the story is that both Europe and the United States are going over the longer term to decline as a share of world industrial production or world output. And the countries that are expanding their share in output are sometimes with good policy mix, but very often with bad policy mix. And that's where the experimentation is going to, at least in my view, is going to occur.
Thank you very much, Harold. I understand that André has to leave. Thank you so much, André. Thank you. I still want to give the opportunity to Bob and to Ivo to give some final comment.
I would comment on André's intervention that I think he's right that the private currencies are in principle the products of economic illiterates who do not understand the need for an elastic currency, though this is balanced, of course, by the fact that in practice, the private currencies are available in such profusion. If you just examine the case of FTX, the kind of home currency of FTX was not at all in short supply, but these are crazy inventions of engineers with no history.
Thank you, Bob. Final word for you, Ivo.
Yeah, many thanks. Maybe two things. First, on Bob's remark on the Triffin Kindleberger at Tobin, I agree with what Bob said, but I was trying to make a different point. It was more in the sophistication of asset and liabilities of Tobin and Friedman. That was my point. And then I would maybe like to go back to Thomas Meyer's question. If one looks at dominant currencies, the dollar has really been very dominant in the post-war period. And this is certainly for economic reasons, but also the military aspect is very important. In the sense that during the interwar period, the country with surplus was France. And France in the interwar period asked to have gold. After the Second World War, the two countries with surplus were Japan and Germany. And why did they not convert dollars into gold? There was partly a security bargain. I'm not saying it explains everything, but a security bargain played a role. And you can contrast it with the position of France with de Gaulle. De Gaulle, who converted dollars into gold, and who moreover insisted on the physical repatriation of the gold to France by a French warship, because gold, it's security issue, and gold, which is in the Fort Knox in the United States, what can France do with it if it's at war?
New York Fed.
So there I would make this link with the military element, that it's a certainly important element, not everything. Thank you.
Thank you very much, Ivo. This concludes our SUERF-Baffi Bocconi Meet the Author discussion on Robert Triffin's life and research, takeaways for the current and future international monetary order. I would like to give a great thanks to Ivo, Harold, Bob, and André for your substantial contributions, for your openness in the discussion, and also for making the link to current topics so well. And I also thank all of you for your interest and for your interesting questions. Have a nice evening. Bye-bye, and take care.
Thank you. Bye-bye.
Bye-bye.
Thank you.
Thank you.
Bye-bye.